Okay, we'll get going. So welcome everyone. My name is Shane Lawrence. I'm Head of Growth with Fundtap. A little bit about my background. I actually started life in IRD and accountancy. Spent a number of years there before moving into business ownership, business management and corporate sales. So I've been with Fundtap for 4 years now. We operate to solve the cash flow timing gap for small businesses. Work quite closely with the accounting and bookkeeping sectors. I guess we're quite passionate around the transition from compliance to advisory and what that means for the small business sector throughout New Zealand and Australia. So I'd like to start just with a simple observation that most small businesses don't fail because they can't generate revenue. They struggle generally because of timing. So they're hiring staff today. They've got to purchase materials this week. They're committing to projects, but the cash from that work often arrives much later. Invoices generally might be issued with 20th of the following month, but we see in practice a lot of payments frequently arrive 30, 40, 60 days later. That gap between spending requirements and receiving cash in the door is where the pressure builds. So across New Zealand and Australia, we consistently see the pattern. Businesses are growing, they're taking on new contracts, they're hiring people, but the timing between costs and payments keeps stretching. Here's where I think the interesting part is. Accountants and bookkeepers are often the first people who can see this happening, but quite often you're not finding out about client decisions until the end of the year review. You guys see the debtors aging, tax obligations, payroll cycles. But very often the conversation with clients is happening somewhere else, with a lender or a broker. Or quite often you're the ambulance at the bottom of the cliff once decisions have already been made. So today's session is going to keep it relatively simple, and it's how to recognise the cash flow timing gap earlier, how to explain it to clients, and how accountants can lead better advisory conversations with these decisions coming up. I'd like to start, we hear from clients, the news, economic experts. Cash flow is the single largest issue affecting small businesses today. Based on our experience, we've actually got a slightly counter, opinion to that, and that the actual problem isn't cash flow. In many places, cash flow itself isn't the problem. The problem is actually cash flow timing. So it's the gap between when money goes out of the business and when it comes back in. Businesses are paying wages every week or fortnight, they're paying suppliers, they're purchasing materials, they're meeting tax obligations. But the revenue from that work often arrives weeks later. So invoices might be issued on 14-day terms, but quite often with small businesses, we're seeing larger businesses dictate extended payment terms, generally 20th of the following month or later. So the pressure that we see in a lot of small businesses isn't about profitability. It's about the timing difference between spending money and receiving it back in the door. Once you look at it through that lens, a lot of cash flow challenges become a lot easier to understand. So across New Zealand and Australia, small businesses make up the absolute vast majority of the economy, 97% across both markets. Most are operating within really tight cash flow cycles. In fact, a recent study showed that 82% of all business failures are directly attributable to a lack of cash flow. On average, 48% of all invoices are paid late. It's an estimated cost of $2 billion to small businesses across New Zealand and Australia. So the scale of the issue and also the opportunity to fix that for businesses is significant. Another common misconception we see is that profit and cash flow are often confused. So quite often we're seeing profitable businesses hanging on until the 20th of the following month. Quite often they're robbing Peter to pay Paul, or foregoing growth opportunities because they're unable to fund the upfront costs. A business can be profitable but still experience significant cash flow pressure. So what? I guess, what does this all mean for your role in today's context? It's been coming up about 20 years since I started as an accountant. People were talking about the transition from compliance to advisory all the way back then. What we've seen over the years, systems like Xero coming in, massively rapid adoption of AI and automated work processes. Our belief is that compliance work will increasingly be automated and commoditized. And if you look across any business model over the last 100 years, times in which work is being automated and commoditized leads to lower prices across the board. I guess what's also important to remember is that whilst the ATO and IRD exist, the accountant still provides that all-important trust layer between business, financials, and tax. The tax departments aren't going to completely trust the machines for a long time yet. So I guess in my mind at least, the role of the accountant moves from compilation of data to confirming that data is correct. Accountants will still hold the trusted position between businesses and the tax collectors. So whilst that does remove a lot of the compliance work in the future, unless you're looking to go to a 4-hour work week, the logical extension of the trusted accountant is to finally move into an advisory capacity. We've all been told consistently that the move to advisor is coming. What exactly does that mean? A couple of weeks ago, I spoke on a panel at an Attains conference in Auckland. The topic was Accountant as Advisor in the Digital Age. The first question I asked each of us, and I've been bandying this word around for a while, but what actually is advisory? So for me, the value an accountant can provide could be summarized in 2 key factors: context and connection. For context, I spoke before around AI and automation. As data and information is increasingly being served up to you on a plate, the first role of the advisor is to provide context to the business owner. And I guess what this looks like is we've got these figures and these data here, but what does that mean in the real world? What does that mean to your business and your situation? Once we provide context to the data and their business and their situation, what challenges and opportunities do those figures represent, and what are your plans to solve them? For connection, now you've identified the challenges and opportunities, the next step becomes either I can help you solve that, or I can't solve your problem, but I know someone who can. So in traditional compliance, your clients will pay the bill because they have to, because the taxman said that's what they're required to do to be able to operate it as business. From a small business owner's perspective, there's no additional perceived value to your client from running through that compliance process. However, understanding the data, what that means for a client, identifying possible actions out of that, and either being able to solve the problem, help exploit the opportunity, or provide an introduction to someone who can provide significant value to a business owner, will actually be the thing that differentiates you from the competition. First part to keep in your mind, especially if you've been a traditionally compliance-focused accountant or firm, is that it's not going to be an immediate transition. Every part moving forward of your compliance process that is automated, every single conversation you have with a client moving forward, or every key partner you make a relationship with, all lead towards a change in how your clients place value and time on your expertise. There's a saying around, I forget who said it actually, I'm just saying this off the spot, but to actually be, you actually have to be. So part of that process is actually moving in this new direction, and it'll change the perspective of how your clients see you. Part of that is my first recommendation always to accountants is to start with a question-led approach. Quite often, the only time you'll sit down and talk with a client is when reviewing annual accounts. So my challenge to you in that space would be to get curious about their business, find out what they're doing, how they're doing it, what problems have you solved in the past, and how do you actually solve them? What are your plans for the next 6 months? How are you going to challenge that opportunity? What we've found, and from my experience in the past, is that being a business owner can often be a really lonely pace. And it's quite often you're unable to talk around the challenges and opportunities around a business owner with those around you. The other flip side of that is that I've never met a business owner who doesn't just love to talk around their business, what they're doing, the challenges they've faced, what they've got coming up, and how they're planning to solve them. It's the best and simplest way for you to get an understanding of their business, provide the context and solution or connections moving forward. Quite often, the way one client solves a problem is the advice that you can give to the next one. If we look at providing connections, one thing we always recommend is look across your current database and the conversations you're already having. What are the common challenges across your client base and how are they solving them? Some common ones: cash flow, tax planning, operational, sales and marketing. I'd ask you to identify 4 or 5 main problems that your client base are facing and actively reach out and establish relationships with specialists and experts in that field. If you don't know someone, ask your clients, who are they dealing with? Who's really good? Who can I trust? Ask your colleagues if they're having the same conversations. This becomes the basis of, I can't solve your problem, but I know someone who can. Also, like to speak briefly about my mother-in-law. I had a major breast cancer scare a number of years ago, scheduled to undergo surgery to remove the tumour. So my wife, if you know her, she's researched every single detail. She's a natural warrior. She actually approached the surgeon before they went in and, asked them the usual questions, is everything going to be okay? Are you nervous? She actually asked him, she said, are you the right person to be doing this surgery? His reply to this was, to be honest, it's just another day at the office. So he dealt with this problem day in, day out. Those few words gave him more comfort than any technical explanation could. Most small businesses that we work with and we come across, they're good operators who don't have an understanding of their business finances, the implication of that data, and the challenges and opportunities that it's coming forward in. So you're working in finances day in, day out. And eventually your advisory focused work just becomes another day in the office. You are the expert in this field. And this is why we see, at least, that financial advisory is the simplest and most logical step to take for accountants to start their journey in the advisory space. Some quick ways to identify cash flow or financial opportunities to start conversations with your clients. One thing we're really big on and also recommend is setting up some red flag mechanisms within your accounting software or reporting products. These can help identify issues before they become an actual issue and allow you to provide proactive advice through to your client. Where I find the true value lies is actually being the fence at the top of the cliff as opposed to the ambulance at the bottom. So a few common ones we've identified that can be set up. One overlooked one, when I was an accountant back in the days, we used to run a number of ratios and that side of things to see how our business was going. A common one we come across is the accounts receivable and accounts payable current balances. If your clients, not all of them do, if they're using their accounts payable function correctly, it's the simplest way to provide a short-term cash flow forecast of what that business is expecting over the next month or two. If the account payables balance is outweighing the accounts receivable balance, it's an early red flag to some upcoming cash flow timing issues. Overdue account payable balances, looking at current balances versus historical. You can set up some reporting based and around if it does get above a certain level. Quite often what we see, I mentioned earlier, robbing Peter to pay Paul, is that if there's short-term cash flow timing issues, a business will actually choose who to pay based on the expected outcomes. And we can see some of the softer creditors being pushed back into 30, 60, 90-day balances. Another one we come across quite a lot is profitable businesses. So on paper, they're making a profit, but a declining bank balance. Over the longer term, a profitable business will always generate more cash than otherwise, in theory, but quite often, especially for short spurts of time, large increase of profit, decreasing bank balance can identify some short-term issues coming up. Another large one we see is rapid growth. And again, if a client has their pricing models right, any business that goes through rapid growth, the cash flow will eventually catch up. But until that does, money's always going out the door before it's coming back in. So we see that quite often with small businesses. May have picked up a large contract with a supermarket. They're on 45-day terms. Going to be really good for them, but I need to order in more product on Monday. I need to hire staff next week to fulfill this. So a couple of things there to look at as well. So scaling businesses, seasonal businesses. Again, looking at the AP place, quite often it is one major debtor that isn't paying on time that's causing flow-on effects for everything else. So we'll see late payment obviously being one there as well. The other major one, and not so much to look out for, but an opportunity cost for small businesses, is around opportunity or lost opportunity. So we've seen a number of businesses that are missing out on contracts because they're either unable to fund or they can't work within the terms of trade for larger businesses there as well. So we will follow up with a one-pager around red flag mechanisms and easy ways to identify upcoming issues there for you, and also a one-pager around common questions you can ask your clients to help identify upcoming issues and opportunities there as well. So what we see is cash flow timing is a near universal problem. Xero statistics show that 95% of all businesses will have a cash flow negative month every year. So there are a few key indicators that offer a pair before a client hits crisis mode. And we all know for 99% of your clients, the accountant receives the call after the ship is already sinking. The goal of moving to advisory is putting yourself in that trusted advisor process where you can identify and either solve or provide an introduction for someone who can solve those problems. As you go through this journey, the goal should either be that when issues or opportunities are identified or at the start of any crisis, the accountant as advisor is the first person the client calls. The most valuable thing advisors can do is to start the conversation early. So I guess in summary, before I pass on to my colleague Rick, many profitable SMEs experience cash flow pressure. Often the pressure isn't revenue or profitability, it's timing. Accountants and bookkeepers are in a unique position to spot that early and guide clients through it. So thanks for your time. I'll pass on to my colleague Rick, who will take you through a brief overview of the Fundtap offering, the advisor portal, and how that can help you start the conversations earlier. Thanks.
Awesome. Thank you, Shane, for providing a bit of a holistic oversight of what we're seeing in the market and the ways that accountants can begin their journey into advisory. So what I'd like to share on is a little bit about a few more of the details of the role of advisors over their clients, the options out there, and what Fundtap is doing to help our partners move into that advisory space. So one of the key aspects of advisory, as I'm sure you all probably understand, is knowing the options available to your clients. So Shane touched on it right at the start. One of the major issues facing SME businesses across New Zealand and Australia is actually cash flow or cash flow timing. So if we know the number one challenge that small businesses are going to come across is cash flow timing, that means the most common tool needed to solve that might be a financial solution that addresses cash flow timing. So currently out there at the moment, there's not a lot of options for small business owners that effectively solve the cash flow timing issue. So banks are often, long processes, takes 4 to 6 weeks and might not even get approved. They're moving away from small business finance. So they're slow, not very cohesive for a small business owner on the day-to-day journey. So second-term lenders, often they are looking to provide a 12 or 18-month loan for a problem that's actually only a 1-month issue. The money's coming in, it's just not in the bank account yet. And traditional sort of invoice factoring companies are often very, very rigid. So they're intrusive, they get in between the business and the business's clients. So they don't offer a perfect solution to the number one issue facing small business owners at the moment. So what do SME clients actually need when they have cash flow timing issues? They want something that's simple, something that's private or non-intrusive, so they don't have to change the way they run their business. And they want something that's flexible, so they only have to pay it, use it when they need it and not when they don't. They're not getting roped into a long-term obligation for a short-term challenge. So ironically, Fundtap is specifically designed for small businesses. So Fundtap gives business owners the ability to assess and then to act on a decision to inject cash into their business when it is the right decision. As advisors, you're placed to help them make that assessment and also to help them act on something like this when that situation does arrive. Fundtap does this by offering a really simple product. It's simple, fast, affordable, and a really, really clear funding service. So I'll share a little bit on that now so you've got an understanding of a potential solution to the number one issue facing small businesses at the moment. So the Fundtap model, what we do is we turn outstanding receivables into instant working capital. So instead of having to waiting to be paid for outstanding invoices, your clients can access funds from those outstanding invoices and have them in their bank account today. So we fund up to 90% of an individual invoice. It's a pure pay-to-play model, so there's only a cost to the business when they choose to fund an invoice, not when they don't. So no sign-up fee, monthly fee, or lock-in contracts. We fund up to $200,000 at once, but we also have no minimum funding. So we can service the small businesses, the sole traders running their own ship, right up to some of the larger businesses doing a lot more in revenue each month. What this means from your perspective, if a client comes to you last minute, we can go through and get them set up quickly, and we can also set them up ahead of time. So how are we able to service, on a 24-hour basis and also 6 months ahead of time? It's due to the technology we use in the background of Fundtap. So we're a fintech company. We focus on the technology to make the process as efficient and smooth as possible for small business owners. As we know, they are very, very time poor. And as I mentioned, they want something that ties in with their business. So what we do, we connect with the major accounting software providers out there. What that allows your clients to do is to pull through all of their outstanding invoices so they can log into their Fundtap portal and see all of their invoices they're due to be paid. That allows them to get upfront quotations on every funding through Fundtap before they go and submit that funding. So with you as an advisor, you can help them assess the opportunity cost of not funding that invoice. As Shane mentioned, you might have a new contract on the cards, but you need to, lay out some upfront capital to buy new products or go and hire new staff to go and actually take advantage of that contract. So Fundtap works in really well. We make it super clear and easy for a business to assess the value of actually bringing that money forward. So once it's set up and approved, businesses have access to same-day funding moving forward. So they can log in, click on an invoice, get a quote, accept the quote, and have funding in their account that date. We set up repayment based on the invoice due date they've given their clients. So we're not adding any extra cash flow pressure to the business. We're tying it in with the cash flow timing that they have set up. The other benefit, as I touched on, of connecting the accounting software, it allows our team and our machine learning in the background to make really, really fast credit decisioning in the background. So you and as an advisor, you're not having to chase up bank statements or go and create end-of-year accounts for your client to go and get funding. So long as the financial data and the accounting software is relatively up to date, we can use that to make our credit decision there. To give you a bit of an overview on the pricing of Fundtap, we make it super simple by offering a 4% base fee on all invoices with a daily rate that works out to be about 15% per annum. So that's how our system is able to quote up front. It'll start at a 4% base rate and then look at the invoice due date to calculate the total fee there. So generally on invoices in New Zealand and Australia, we see a fee between 4 and 6% of the invoice value. So really, really simple example here. If your client logged in, had a $10,000 invoice and wanted to draw down on that, we could fund $9,000 today. We would quote up front, so let's say it's a 5% fee, which is our most common. We would quote $500 for that funding. We then set up a direct debit on the invoice due date for the $9,000 we advanced, plus our 5% fee of $500. So we'll withdraw $9,500 on the invoice due date once their client has repaid them. Anything left over will just sit in their bank account. So that's just a little bit of an overview on Fundtap, so you've got an understanding of one of the best solutions out there for small businesses in New Zealand and Australia. There aren't many other financiers that have this model of funding that are able to service businesses across so many industries so quickly or with so much flexibility. So just wanted to touch on that so you can build an understanding of one of the products there. And for advisors, so this is where I'll just quickly touch on what we're doing to help you move into that space. So if advisory is something you're interested in, you can see a growth path down that channel. This is how we are planning to help you move forward with that. So from our perspective, everyone is better off when small businesses have the help of good advisors. So you're a trusted advisor to your clients. You're already looking over their numbers. They trust you to do the end of their accounts and handle personal information. So if you don't solve the cash flow timing issue, they'll go to someone else who will. As Shane mentioned, not everyone will have the best interests, or he didn't mention that, but if you don't look after your clients, they'll go somewhere else. And there's a potential that the other person they go to doesn't have their best interests at heart. Might be another finance provider who doesn't understand their situation as well as you do, so can't give them the best advice like you could. So becoming an advisor gives you the opportunity to enhance your relationship with your client by solving the issue either now, if they had an on-demand financing issue, or if they had a seasonal future issue arising, you could also use the Fundtap tool to solve that problem before it occurs. One of the benefits, other benefits of partnering with Fundtap is we do offer advisor incentives. So if you are to refer a client through to us, because it's the right match and we can help them through their short-term cash flow timing issue, we do offer incentives for that. So I'll go through those now and a little bit about how we handle this with our accountant or advisor partners. So what you're looking at now is the Fundtap Advisor platform. So for any of you accountants out there using Xero or who have Xero clients on their books, this is for you. So Fundtap Advisor allows you to connect and pull through your client's Xero ledger to our advisory platform. What this does is it will automatically run a Fundtap credit indication score in the background, indicating to you which businesses Fundtap could likely work with. So if you see all clients here, you'll see they've got a series of coloured dots next to them. So green dot indicates to you that this is a client that Fundtap would likely be able to fund. Orange is also likely, and red is not as likely. So if you have a green client, based on the financial data, it's very likely that we could fund that client. Orange, we could also likely fund them. So what we're offering advisors is actually removing the number one barrier to advisory, which from the client's perspective, it's the cost of giving you a call to ask for your advice. So most businesses, they want the help from their advisors, they want their trusted advice, but don't always want to sit down and pay for that session. So for any of you who sign up and register with the Fundtap Advisor platform and connect clients, any clients with the green or orange lights next to them, they're eligible for our Fundtap advisor subsidy. So we're offering you a $200 advisory subsidy when you sit down with clients who are connected and have a green or orange dot and just having a simple advisory session. So you might choose to connect, a few seasonal businesses or some businesses are in growth phases, and you think that they're going to have cash flow trouble moving forward, or they do have cash flow timing issues immediately. So no questions asked. We're happy to provide a $200 upfront subsidy for you to sit down and just offer your advice to those clients. And then for any clients that you send through to us and that end up funding, we'll offer a $150 subsidy moving forward each quarter. So there's no need for your client to have to splash out on advisory themselves. We will cover that cost ourselves for any active Fundtap clients. So it's a way for you to really grow your advisory side to your business without causing any friction with your clients. How to refer a client to Fundtap. So each new Fundtap partner, we create a unique landing page, which is tied into your business. So from here, let's say you had the Fundtap staging test entity as your client. They were in the green light and you'd had the conversation with them and decided that Fundtap was the best way to move forward and solve their timing issue. You'd simply send them your unique referral link, and when they sign up through that page, it will be allocated back to you, so we can remunerate with the subsidy there. So just wanted to really thank you all for your time coming in. Hopefully we've added some value to you today, chatting about the options available out there for accountants to move and grow their business in the advisory space. From here, I'll send out a register link to our Fundtap advisor portal. So everyone here who's interested can sign up and play around and connect potential clients. If you guys do that, I'll also set up your landing page with your referral link so that any clients you send through can be registered on our system and tied back to you. So that's all from me. From here, Shane, I'd like to open the floor for any questions from anybody here that has some. Feel free to send them through in the chat if you're nervous about speaking out as well. See, Amanda's got one possibly coming through. Possibly not.
Yep, still typing by the look. So whilst we're just waiting for Amanda to, here we go. Well, prior to the invoice due date, every payment needs to be made on that day. Is that correct? Yes, correct. So our funding model solves a fundamental problem around cash flow timing, and how that fits in for most businesses is that I've earned money. It's not sitting in my account at the moment, but my GST bill's due, my Mitre 10 bill's due, I've got wages to pay tomorrow. So generally what happens is most businesses, we're getting the phone calls that the accountant should get. I'm in this problem, how do I solve it? And we're able to go through and solve that problem at that time. One of the unique things of our model, because we have no establishment costs, monthly service charges, login contracts, the client is in control over what they fund and when. So what we're seeing a large increase in, and especially from our advisor clients, is pre-approved facilities. So we rely on advisors having conversations with their clients saying, hey, you don't have a cash flow timing gap right now, but it's likely that you're going to over the next 6 or 12 months. Based on your situation, if Fundtap was the right option, then it might be worth going and setting up the pre-approved facility with them. As Rick mentioned, we're automated and API'd into all of our data and credit decisioning. So we're able to turn that around really quickly because we know that The reality is by the time us or the accountant gets the call, quite often the issue's already happening. So it's a relatively low touch process, and we can provide some certainty pretty quickly, and on an ongoing basis, funding's available within hours. So I hope that's answered your question there, Amanda. Rick, did you have anything to?
Yeah, just on that, possibly, Mandy, you might be referring to if cash flow stress is caused by perhaps a late paying debtor or something like that. So a lot of people, they do come to us, in stress because they've got an invoice that's due in the future, or one that's overdue now, so they don't have the money in their account to pay invoices. So a lot of customers will try and submit invoices from one that's due in 2 or 3 days, or one that's due 5 days ago. But we can fund based on any invoices with a future due date. So there might be one invoice or one client causing the stress, but they can use advancements of funds from any of their future invoices to bring forward payment to cover the issue there.
Yeah. And if it helps provide context, Amanda, our facility operates in practice closer to a revolving credit facility without any holding costs attached. So once the facility is set up, they're able to make the decision on the day. The funding request probably takes about a minute to go through our platform. And then assuming that request is through by about 4 o'clock in the afternoon, New Zealand time, it's same day funding available.
What I'll do is after this, I'll follow up with everyone here who registers with the platform, so you can have personalised time with myself to ask any specific questions that you have that you might not have been covered on this sort of webinar or micro course. So we can answer questions in the future, and we'll give you some time to do that as well.
Yeah, absolutely, Amanda. So, and that's, I guess, where we're encouraging. So, I guess to summarise, thanks for the time. We didn't have a lot of time to run through all of the details. As Rick mentioned, we're of the opinion that small businesses make better financial decisions with their advisor at the table, and we're looking to find a way that we can encourage those conversations. So whilst quite often it is an immediate need when the client is calling, we're really encouraging a proactive approach to the pre-approved facilities, almost like a house insurance policy you don't pay for until the house is already on fire. So that's where the planning ahead, conversations with your clients, finding out what plans they've got coming up, possible challenges and opportunities, and then setting up something for that. So, and thanks again for the kind words, Joe. Really appreciated the work with you. So again, thanks all for your time today. Rick will follow up obviously with the advisor platform details and our 2 one-page cheat sheets around red flag mechanisms and initial questions to ask your clients. I've popped both myself and Rick's email addresses into the chat there. So do feel free to reach out if you've got any questions or thoughts moving forward. So thanks again for your time.
Thank you, guys. Bye.